Topic, and we're recording this, by the way, everybody, so we'll send it out to everybody, and just maybe chat when you have a question, just because there are multiple people on. And then Michelle, if you'll keep track of the chat, that'd be great. Michelle is our marketing director, and so we are hosting this. We have Alex Massa with AMC Appraisal Management Company. We use them exclusively. They're here in Houston, so they know the local market. They do other markets as well, but Alex is a good friend and super professional. And thank you for our last minute call to have you on today. The first thing that and this is just selfish for me because I'm just ordering appraisals and not even having time to really and realtors ask me, and that's what I know that they're curious to know is, what are y'all seeing in trends, and are you appraising differently? Like, remember 8 or 9 years ago where there was this market time addition, like you could gross up a property value based on what the trends of market were doing. And then in 2008, when everything burst, Fannie Mae put the kibosh on that method, and they were like, we won't allow that anymore. Can you kind of talk about that, and has that changed, and are y'all doing that now?
Yeah, just Jen, real quick. Again, introduce myself, Alex Massa. I'm the CEO of Appraisal MC, and we also have a staff division called Initech Appraisals, based in Houston. I've been an appraiser since 1999. I'm not currently in the field, but was in the field up until about a year and a half ago. I'm very familiar with the Houston market. So let's talk a little bit about this. I've had a couple of fireside chats similar to this, Jen, and agents have some really good questions. And let's rewind. There was a time in 2012 or 13, Jen, you might remember, there was some big economic factor. I think it had to do with the oil industry that caused just a frenzy of buying, especially in the energy corridor. There were multiple offer situations on houses selling above list price, and we started coming in below we would appraise below the negotiated sales price more often than we made it, and everyone thought we were crazy.
I do remember that. It was painful.
Yeah, it was very painful, and it all happened within the course of a month or two. And I can just remember calls with you and a couple of other loan officers, just why is everything coming in low when there's so much demand? And one thing that we've got to look at right now is, the true definition of market value is a willing buyer and a willing seller in a cash transaction. Now, what we do when we're doing an appraisal is we're providing an opinion of value based on very stringent, I would say conservative guidelines, because the guidelines for appraisals are written by Fannie Mae, Freddie Mac, FHA, USDA, and VA. And in their eyes, if you can't prove the value of a property with historic sales, then you can't prove the value. So what's happening now? So now we've got properties that are selling above list price, multiple offer situations, and they're still not appraising. And everyone thinks, well, appraisers are crazy. The market's so hot. There's obviously a ton of demand. Why can't they make this work? And it's because we're given those stringent guidelines, and those GSEs, government-sponsored entities that I just laid out, they're insuring these loans. Jen, if you could kind of give us, I'm gonna pull you in real quick. If you could give us the process of what happens when you close a loan, who insures it, what's the process there, so that the realtors understand that a little bit more.
Yeah, and so this is the stuff that we do is sold on the secondary market with Fannie Mae and Freddie Mac or FHA guaranteeing it, basically. So this isn't every lender. There are some private local banks that portfolio stuff. I'm not talking about that. But when we close a loan, Legacy doesn't service, even though we're direct with Fannie Mae, we could directly service something, but we choose not to. So, you know, many lenders, let's say they're on a level here, they'll sell the servicing to like Wells or Chase or somebody. But behind the scenes, Fannie Mae and Freddie Mac are guaranteeing it. Like they're saying, hey, Wells Fargo or whoever is servicing, they have a payment somehow, and this gets really super deep. I'm just making it easy, but they reimburse these larger servicers a certain amount of money, and really it's a Fannie Mae pooled loan. It just, you'll never make your loan payment to Fannie Mae ever, but they're behind the scenes knowing what's going on. It has to meet certain criteria. So just think of it as a box, and you have to fit in the box with the millions of other loans that are in there. And so Freddie Mac has their guidelines, very similar to Fannie, but what they do is, and FHA is its own deal, but all of them establish guidelines that have to be followed for appraisals. I think that's where you're going, Alex. And if they don't, we can't securitize it in that channel, which means that our company and all other lenders, it could get kicked back. Like we could package up and bundle millions of dollars worth of loans, and they audit each one, and they can say, hey, this on, you know, Smith Street, we don't like this appraisal. So this $1 million loan you just did, we're not buying that loan. And they'll kick it back. And then we're stuck with a loan that we call it a haircut, but we have to take a major haircut on it. So that's how it works behind the scenes, is that lenders' ultimate goal is it's securitized somehow in this whole bubble of systems. So it has to meet this criteria with appraisal standards that are all pretty much the same. Is that where you were going, Alex, with that?
Yeah, and you want to get these GSE insured, Fannie, Freddie, FHA insured loans because they do offer the best rates. So they're insuring it, and they're ensuring that if it gets foreclosed on, they're taking it back and they're taking the risk on it. So they're giving us very strict guidelines to where when we prove a value, it's got to be based on historic data. And when I say historic data, you know, appraisers usually go back as far as 12 months, but we may have a couple sales that sold a month or two ago. But even right now, that can be a big difference, right? So that's the challenge that we are experiencing right now, is that the market's moving so quickly, and it started moving this quickly, I would say maybe December. The market just got really, really hot. Coupled with low inventory, it just breeds a scenario to where you're going to have multiple offers, but still may not appraise. Now, just because it doesn't appraise doesn't mean it's not worth it. It just means that we can't prove it on paper based on the guidelines that are given to us. So I want you as realtors to understand, as appraisers, we know you've got 20 offers on the house and we're coming in below all 20 of those offers. Like, are we crazy? No, we just have these crazy guidelines, and it's hard to explain that to buyers. It's hard to explain that to sellers. But I think right now is a good time to set those expectations with those clients. Jen, I'm gonna pull you back in again. So let's say someone's putting 20% down on a house and an appraisal does come in low. What options on the financing side do you have that can still push this loan through? So realtors better understand how you're able to maybe rework the loan and still work for your buyers.
So yeah, let's say that's a great question. So let's say that they signed the appraisal addendum, which means that they pretty much aren't going to, we know the seller's not going to renegotiate. So they can do a 5% down loan. So they would have PMI, so they can rework the loan to value as long as they meet the criteria, with debt to income and all that. Debt to income is more stringent and it's lower on loans that have PMI. But let's just say that all checks out. They could do a 95% loan and they would just have PMI. So, and then later, you know, when the value is below 80%, as of course all these sales keep happening, PMI can be waived with a higher value if a market is appreciating after 2 years. You just have to pay 2 years into the PMI. So you could do that. Definitely. And when people are putting down, I'm just going to kind of reverse it a little bit. The time that it's hard is when people are putting 5% down or 10% down. You don't have much more loan to value to play with. So those people going in based on what y'all are, you know, y'all are running comps the best that you can on data that's happened at the time of the contract. Well, we know there's sales that happened since after that. But you've got to deal with the data at the contract. So you usually hopefully have a gauge of like, listen, you're probably going to come out of pocket with this much money. So having that talk with them up front, and we've got lots of clients that are like, yep. And I've seen some people put in the appraisal addendum that as long as it, like, let's say that people only have 10 grand extra, they'll put a cap on what it can come in at to where they're like, well, yeah, we can pay over and above as long as it appraises, you know, this or below. I guess y'all can do that. I don't, you know, I'm not trained in writing contracts, so I don't know, but I've seen that. When people are putting down a ton, like 50%, I just had a guy, he was putting like 50% down and it came in a little bit short. He's like, yeah, whatever, I don't care. Like our loan to value had so, like, as long as he puts down 20%, he doesn't have PMI. Like, what do I care? If it's 20% loan or 50% loan, the loan is the same. The loan didn't change. The loan to value changed, but it was fine. So it really dilutes the effect the more that they put down. It's the people that put little down that we have to be concerned with, and really making sure that they understand at the time of the contract, having the conversation like, okay, how much extra do you have? My data and my comps are saying, you know, it's likely to come in at this. So I do want to mention one other thing. We've had this happen. So the comps that are used are only as the date of the appraisal. So we had an appraisal that came in short, and there was a rebuttal, and the argument was, well, this sold yesterday across the street. And it's like, well, it sold after the date of the appraisal. I mean, we even called you on that one, Alex, like, hey, it just, I mean, it is what it is. So if you know that, you know, as a realtor, if you know that something is pending, call the listing agent and say, what's the date of it closing? And maybe give that information to the appraiser when they're coming to the house. Because we all know that the very next sale is the best next comp. When prices are rising, that's what happens. And so I think if y'all do that legwork and see the pendings that might be a good comp, get the closing date, give that to the appraiser, give them the listing agent's name, put it on a silver platter for them. I mean, Alex, am I right? Would that like totally help?
Yes. I mean, you're so spot on. And I want to expand further on that and give you just a little bit more technical detail. So the appraisal value is as of the effective date of the report, and the effective date is the date that the appraiser visits the property. Anything that closes after the effective date cannot be utilized in the report. FHA won't even let you send it in as a rebuttal. So Jen, you made a great point of, you know, if you, especially in a market like this, you just have to be a little bit sharper than the other agents out there and know this, that if there are good pendings that are going to help and they're closing in a week or 2 weeks, hold off on the appraisal. Let's wait until those comps are closed, because that's the only way that we can prove a value is based on the closed sales. There's a, Jennifer, I think you may have put this question in there. Is there any weight given to multiple offers and or pending sales and market trends? And that goes into, you know, we're going to include an active or a pending in the report just to prove to the underwriter that the market's still headed this way. However, the value is only going to be proved with closed sales. So,
okay, so it can be written about, but it can't. And if it hadn't closed, it hadn't closed.
It won't carry any weight. Again, the same thing with the multiple offers. Obviously, we understand that there's a lot of interest in the property, but if I don't have a closed sale to prove it, then I can't. These appraisals are going to get audited and reviewed, and you've got to have some closed sales in there. As far as market trends, I always get the question from realtors, and it's a great question. Well, if you have to go off historic sales, how is the market moving? Well, it's moving right now based on people paying the difference, right? So if an appraisal comes in 10 grand over the list price and it doesn't appraise and the buyer pays that extra 10 grand, guess what? We've got a new comp.
Yeah.
There's also, I'm not going to get too technical on this, but there are what's called time adjustments that we can make on appraisals. For example, if I use a comp that's 12 months old in the market, and obviously the market's moved up, I can make an adjustment in the appraisal to account for it being a 12-month-old sale to bring it up to current dates.
Okay, so that's what I had a question about, because we saw a lot of that before the '08 thing. And then after '08, Fannie Mae was like, put the kibosh on that time adjustment thing. Like they said, forget it, don't even try. But now it looks like, I mean, it's pertinent, like all over the country, this is happening, not just Houston. So are you getting, I guess here's my question. Are you getting kickback from lenders, underwriters when you do that?
No, we can still make those time adjustments, but they're tricky, right? Like if I've got a great identical paired comp from the same neighborhood that sold a month ago, I don't have enough data to really prove that it's gone up in that month because that's the most recent sale I've got. So I'm not going to make a time adjustment on that. But if I have another comp on the report, usually we use at least 3 to 6 sales that's 12 months old and sold for 20 grand less than that one comp that sold a month ago. Well, I can make a time adjustment based on that data. So it helps, but to move past the barrier, the market's creating itself right now with these multiple offers and people paying over list price and over appraised values. So there's still a way for values to go up, and that's the way it's happening.
Okay. Okay. If you don't mind, if I'm going to point out a couple of things that I know are going to cause maybe question or just for knowledge of whoever's watching this. So in an appraisal, depending on whether the addendum's signed or not, I'm just saying generically, anytime something doesn't meet value, there's 3 choices. Number 1, reconsideration of value. So we rely on the agents to give us data. Just remember, you have to be nice. We rewrite. I can't tell you, Kenny on my team, who Alex, it's his golfing buddy, so Alex knows, Kenny rewrites a lot of y'all's rebuttals because they, just remember, if you're not nice, it's calling their baby ugly. So you can't do that. Like, just stick to the data. These are the comps I used to get the value. Read the report first, make sure that they didn't include it or why they did. And sometimes they mention it in the report, that same comp and why they didn't do it. So read the report, stick to the facts. Now, the other thing is you can meet, we've seen people meet halfway. We just had that happen the other day. We've had people, clients pay the whole difference. And we've also done the loan to value change where we're like, hey, we can just change the loan to value. It's not a problem. You'll just have PMI. It's no big deal. Like, it's fine. So if they have a really high credit score, PMI is so small anyway. So those are really the options. So when that happens, the way we approach it is we educate you right at that time. We always call the listing agent, of course, get everybody's permission to send the report to the listing agent, obviously. And again, it just depends on the dynamics of what we know to be. If you know it was a house that had 20 offers, we know they might not be willing to negotiate. But we are seeing, just so y'all know what I'm seeing, and Alex, I'm going to be interested in concurring or not. I'm not seeing any more percentage of things not meeting value than I have in the past. Like usually it's just a numbers game. 10% of the properties for years and years and years just don't appraise. And it just depends how it was priced at the get-go. So I'm not seeing, I had an appraisal the other day come in 50,000 over. So I know a lot of realtors have the thought, which is incorrect, that appraisers oh, they're just going to praise it no matter what to whatever the contract price is. I mean, I don't agree.
That's
I
right.
mean,
Yeah.
I mean, this appraisal that actually y'all did for us is a perfect example that now it was a high price property. It was $1 million property. So 50K was a small percentage, but still, I mean, it came over. So
Yeah.
we're like flipping cartwheels. I mean, we were worried. And so, I mean, I'm not having to have that many conversations. So, I mean, the market forces are working. And usually when it doesn't come in, everybody kind of knows about it. But
Yeah.
Alex, what are current turn times? I mean, I see that they're about 2 weeks. Is that still?
Yeah, I want to rewind and just let you know that we are seeing a little bit more sales coming in below the sales price. And primarily it's in a certain price point, like under 375, 350. There's just so many buyers, limited inventory, and also a lot on new construction.
Yes, that we've had on new construction. Yeah, I've seen
Yeah,
that.
so turn times. Actually, before I jump in there, Gene Weaver had a great question, and I'm going to rewind to the beginning of the conversation. If the standards are the same, why can appraisers come up with completely different values? And that's such a great question. So this is not an exact science. It's an opinion that we're providing, and it's based on the data that we can find. And it's very similar. I'll put an analogy together here that may resonate. Let's say you've got a listing appointment and you're competing against two other agents. Every single agent is going to come up with a different value based on their CMA and what they see and what they think they can get for the property. It's very similar in appraisals. There's no set standard on how we make adjustments or which comps we have to use. We just have to use the sales that we feel are the most relevant to the report. So that's why you come up with different values. Also, if it's different points in time, for example, we had an appraisal that came in low by 20 grand, a $400,000 house. Well, 3 or 4 days later, one closed at that 20 grand higher price. So now there's a new comp out there. Luckily, they changed it to, I think they went from a conventional or a VA to conventional. So they were able to order another appraisal in that scenario, which you're not always able to do. And the second appraisal came in higher because there was now a better comp. So it's also based on a specific point in time. Jen, let's talk about turn times. With what's going on in the market, and every realtor I talked to has had their best quarter, if not near their best quarter, this year. And that means that there's a lot of volume. Everyone's busy. Everyone's got buyers. Very few have sellers, unfortunately. That volume is causing a glut with what's going on with appraisers. Now, one other thing that you've got to understand is along with all those purchases, Jen and her mortgage team and us as appraisers are also dealing with that many refinances. Okay. Mm-hmm. So whatever volume you're seeing in the market, double that. That's what we're experiencing. There's a shortage of appraisers for this type of environment, but we've never ever seen this type of environment, right? There's been some pent up demand. Rates are really low. Turn times, yes, on an easy property, easy 2 weeks, but I've heard horror stories. You've got to be in the know with a good company, with a good AMC. I got a call from a friend of mine. Jen, Willie Merritt?
Yeah.
Willie called me the other day and he was like, how long are appraisals taking for you in the Heights? I'm like, let me make one call. Called one of my appraisers that works there and told him, I could get it done in 12 days. And he said he had talked to 2 other AMCs that told him 6 weeks was the fastest.
So I want to pause right there really quick. AMC, by the way, is appraisal management company, and most companies use an appraisal management company because we have the burden, the fiduciary government requirement to make sure that we're arm's length. Like, I can't know who the appraiser is until we get the report. We deal with a portal, and so we have to remain, like, we just know that we have a list of however many appraisers that Alex's company manages for us that we've handpicked. We have our handpicked list of people. And it's one thing that Alex's group does really well is a tight zip code filter, like super tight. Like I never have a Woodlands appraiser finance, doing the Heights or whatever, like never. So we're confident about that. Now, not all companies manage that way. There's some national appraisal management companies, and I don't know how they do it, but I just wanted to talk about turn times too. We've tried to get rushes, and what I'm seeing, Alex, and perceiving is that basically, I think appraisers really don't want to do rushes because they can't. It's like, where am I going to even find the time?
Right.
So they charge this exorbitant. I mean, I had one the other day, and I don't know if it was your group because it might have been like a Dripping Springs property, or I don't know what it was, but they wanted like $3,000. So basically, they were saying, I don't want to do a rush. I'm going to make it's so exorbitant that no one's going to be stupid enough to pay it. Like
You
it's
say that,
ridiculous, but some people do. Oh, you're frozen, Alex. So I want to let y'all know rushes are not that easy. And so we've got the dynamic in the beginning. What we're seeing is, people want to be able to have an option period. And if we put the appraisal order in and we pre-collect from the client, we send them a quick link, and we can't order the appraisal on day one. Number one is we have to have a signed disclosure agreeing to do business with us from the client. That's like a legal thing. So we had an agent the other day that wanted us to order it. Like I'd had the contract for like an hour, and I was like, look, I'm sorry. I just got the contract. I've got to, there's things that lenders have to do before we can order appraisals. And for the most part, that your clients want to get the inspections, renegotiate if possible. So a lot of y'all tell me don't order it yet. Well, so I'm really not ordering it until day 7. I mean, that's normally what happens, is like a week has gone by. So in a 30-day period, I'm not ordering it till day 7. Like do the math. Like we're not getting it until the 3rd week of the transaction. So that's why 30-day closings are just so hard. And I get it. Like y'all are having to win to win these offers, you've got to put aggressive dates on there. But then there's reality of like, how can we do it in 30 days and give them proper inspection time or proper disclosure time? And that's the stress that we're feeling as lenders, is we want to help everyone at a really high level, but some of these dates we're getting are just super unrealistic. We're just dealing with it the best that we can, but it is very hard to gauge, because appraisals, they're solidly, and in the more, and sometimes what we're seeing too, Alex, is so it's a round robin system. So we put the order in, and Alex's group bids it. It's like a bidding system. They go out to different, like however many appraisers, right, Alex? So whatever our due date was, because we put a due date that's going to help us meet the close date, trust me. And then there's many that nobody accepts it because it's a due date that's too soon. So then we increase it a day or two. Like appraisals don't get assigned right away because there's like 2 or 3 days of back and forth. No one's accepting it. If it's a fourplex, forget it. Nobody wants it. Like they're choosing the easy stuff, because if it's really hard, they either charge more or they add an extra week or 2 on it. And they're like, well, we'll do it, but it's going to be, if they think it's a property that doesn't have a lot of comps or whatever, those are the ones that are harder. So y'all need to make sure that you have longer, if you can have longer expectation times for that kind of stuff. So there's a lot more than just ordering an appraisal, like, oh, order the appraisal. Like so much goes into it behind the scenes. Is that, as good as these appraisers are, and as much as Alex has, manages a great list of appraisers for us, they're human. They only have so many hours in the day to get this stuff done. And when they have a watermelon size of list of orders and the time of an orange, because there's only 24 hours in a day, and they have families and they have to sleep, and like that's the pressure cooker that I see is just constant.
Yeah, I'll talk. I apologize. For some reason, my computer died on me and restarted, so I'm on my phone now, but I'll touch on that a little bit. And Jen, you're so right. There just aren't enough hours in the day. And I'll give you just a little bit of insight of what we're dealing with on the staff side. So on a daily basis, we are having to decline between 50 to 70 appraisal orders that we cannot complete. We just don't have the bandwidth. What appraisers are doing right now, there's just so much volume that appraisers are trying to be as efficient as possible. And that means traveling less. So they're staying close to their office or home, depending on where they work. They'll usually stay within a 10-mile radius. Second, they're taking care of their clients that have been longtime clients. At Initech, we probably have a list of 20 really, really good loyal clients that we've worked with for 5 to 10 to 15 years. And maybe another list of 10 or 15 that send stuff sporadically. On a daily basis, we're getting calls from new banks, new AMCs that want to add us, and we just can't even service our loyal clients. So we're not taking on new AMC work, and most appraisers are not. So it all boils down to efficiency and economics. You know, when an appraiser sees they've got 10 orders that are coming in a day and they can only accept 2, which 2 are they going to take? The ones that are closest to them, that are the easiest and pay the most, right? So
gotcha.
It's just a supply and demand issue right now.
So there is a comment. Jean said that she had one come in 2 days, which is amazing. That's awesome. I mean, that happens. I mean, sometimes there's, like Alex said, maybe an appraiser was like, ooh, that's on my street, I'm taking that one. So, yeah. I mean, it's happening. Not all of them take 2 weeks. We're actually starting to see a few appraisals come in early. I had some this week with y'all that came in like 2 or 3 days early, which was really nice. So, I mean, I'm sure there are some out there that are coming in early, which is great, but you just never know. I mean, we never know when that's going to happen, and we can't expect that every appraisal is going to happen in 2 days, unfortunately. So, I mean, my purpose for this was to just set expectation and talking points, so the buyer and listing agent can work together. Of course, you know, it's hard because these listing agents are overwhelmed. I know we have a couple big listing agents on here. Susan's a big listing agent. And so Susan Masiha, amazing. You do a lot of listings. And so I'm sure it's difficult to be a listing agent right now. Having to make a spreadsheet of a gazillion offers and, you know, in the best interest of the seller, right? So it's all very difficult.
I want to add something. Sorry, I'm trying to log into my computer as well. It's just obviously a little bit easier to work on that. One thing I do want to add, FHA assignments and over $1 million properties can only be completed by certified appraisers, and they tend to be the busiest. So if you've got a conventional that's under $1 million, those can come in much quicker. Also, there have been some flexibilities because of COVID over the last few months, and you have to fall under specific guidelines, but there are times where a desktop appraisal can be completed. And, you know, if and when that happens, you guys let us know and we'll order it as that, but it's few and far between. And now that the values are going up, Fannie and Freddie are allowing that less and less just because the market is so risky. So, I
do want to make it, a lot of realtors ask me, so I'm going to interject that right now when you're talking about desktop. There is something called an appraisal waiver. It's called a PIW, a property inspection waiver. And we've been seeing them more and more, but now we're seeing them a little bit less. So let me tell y'all what that is and what it's not. When the address, we have to have a contract, and when the address is run through the Fannie Mae system, it never happens on FHA, by the way. It has to have a large down payment, good credit, like it has to be a pristine borrower. And Fannie Mae, all lenders have to run the automated underwriting through this portal that goes directly to them. And they run the data immediately with the property address. So if the system perceives that there's enough data in the system to support that value, and it's a very pristine borrower with a large down payment, it will trigger a property inspection waiver, which is fantastic. And then you don't have to get an appraisal. We always give the buyer an option. Some buyers say, no, I want it anyway. I want the appraisal. And some say, no, I don't care. I want to save the money, or it doesn't matter to me. I don't care. So it's not automatic on people that have high down payment. And it depends on the property and is there enough data. So what Alex just said about, values are going up at a rapid pace. So if we have a sales price that the auto data in Fannie Mae's database doesn't, it kind of freezes it because it doesn't know how to react. They're like, wait a minute. It won't give a waiver because it wants an appraisal because the value is so much higher than any of the data that they have. So when you're in a rising value market, we're starting to see property inspection waivers less and less and less. Actually, I got one about a month ago, but I haven't seen any lately. And I used to get like 2 a week. Like I was getting kind of quite a few. So Alex, I'm just letting you in. So you might have to get off your phone so it doesn't reverb. So I just wanted to mention to y'all, because a lot of y'all asked me questions like, hey, I've heard about property inspection waivers. So I just wanted to mention that. And the other thing about FHA and VA, in case y'all didn't know this, when the appraisals come out on those, they're associated with a case number that's a FHA or VA case number. And those appraisal values stick with that property with that case number for 4 months. VA is 6 months and FHA is 4. So unfortunately, for several reasons, we're seeing less FHA buyers get contracts, which is really so unfair. I mean, it's just free market forces, right? But I just feel so sad that a lot of buyers that really need and want to move homes that can only qualify FHA are not getting contracts always. It depends on the seller. And because of that, because of the value, just sticking with the property, and, the appraisal addendum, it says on the appraisal addendum, it doesn't apply. You can't, FHA and VA loans don't recognize that. So you can't, so it's conventional only. So for that reason, on these, especially in these lower price points below 300, it is super fierce for your FHA buyers to get contracts. I mean, we're trying, but everybody can't go conventional. So that's like a whole other topic. But I wanted to mention that just to give y'all some definition in case those watching didn't know that. Alex, are you seeing less and less appraisals, FHA, like as a market? Are you seeing maybe like, hey, like we're doing less FHA appraisals because less of them are getting accepted? Like, do you see a trend in that or no, not really?
Not really. The split that we see, I'd have to pull up last month's numbers, but usually based on the volume that we're doing, about 20 to 25% is FHA. And I just want to bring this to everyone's attention that the way we appraise and extract the value and give an opinion of value on conventional FHA, VA, USDA, it's the same. So that it should appraise for the same value. It's the same guidelines. However, FHA does have a few more stringent requirements regarding things that we need to check and make sure that they're functional, and that's the only hesitation that I could see. Plus, is the buyer as qualified as someone that's making an offer conventional with 20% down, right? So that's what you've got to weigh as an agent when you're taking offers at this moment.
Yeah, I had one this morning. Actually, we have a buyer. It was a VA buyer. I mean, served our country and doing a VA loan, and he missed out on the contract because it was VA. And because, the appraisal addendum wouldn't apply. And the one that they took was for a lower price, but they had a really large down payment. And so they perceived that to be stronger because they have more skin in the game. And I actually, well, and this buyer was going to be, he was willing to pay like 70, like if it didn't appraise, he was willing to pay up to like 75,000 out of his, like, you know, under whatever what he was offering. Like, I mean, I was just so sad that he didn't get it. And I mean, we got to help our veterans, but anyway. The bottom line is, though, the debate that I would give any seller or listing agent is, just because they have a large down payment, those deals can blow up too. And so people have large down payments, but the loan, whatever the loan is, we still have to go through the same data and the same underwriting process. Those loans have the same propensity to blow up. So if whatever the loan amount is remaining, let's just say it's a 500,000 purchase and they're putting 200,000 down, okay? Are they liquidating something? Are they getting it from a retirement account? It doesn't matter. Let's say the money is there. It doesn't matter. We still have to approve them for the $300,000 loan and the income to support that and the credit and so just because it's a large down payment, we can't turn a blind eye to all the other underwriting guidelines. So the process is exactly the same. So I kind of giggle when people think that, like, oh, I'm putting all this down, so y'all should just like approve it. And I'm like, I'm sorry, it doesn't work that way. Like $300,000 is $300,000. You're going through the same process as the first-time home buyer that's putting 3% down. Same exact process. So I did want to mention that because larger down payment doesn't mean that it's a stronger offer. Yeah, they're putting more down, but it could still blow up. You know, if it's not vetted properly, that's where we take really a large responsibility, just a huge burden of responsibility in the front end before they get under contract to make sure that everything is in order. And so that's really making sure with whatever pre-approval letter you're using, knowing that that diligence was done. So if you ever hear a client say, oh yeah, I got this letter, but yeah, I didn't have to give any documents or anything, you should like really definitely pause and think twice for sure, regardless of the down payment. So I just wanted to mention that. And we did have a good comment, Alex, that says, why are the appraisers so busy these days if there's so much, if there's so much low inventory of houses? Is it because people are also refinancing due to low rates? Or like, why are they so busy if there's low inventory?
Look, yes, inventory is low for the demand out there, but if you saw HAR's numbers, last month was a record month for Houston, I think, for number of transactions. Now, double that, that's probably how many appraisals were ordered because of the refinance boom as well. So it's obviously unprecedented market and it's just normal. I do want to just give a couple tips because appraisals are taking so long. Just go ahead and order the appraisal. If you didn't say this, Jen, already, I want to bring it out there. Order the appraisal during the option period. Don't wait until the option period is done. Give yourself enough time. 9 times out of 10, the appraiser won't even be able to get out to the property within that option period. So you can always cancel. And if the appraiser has not visited the property, there won't be a charge. So get that order in line, get moving. I'm sure eventually rates will go up and this will stabilize and we'll be back to, you know, typically at this time of the year, we're historically running about a week turn time. And right now we're at 2 to 2.5 weeks. And that's every appraiser in town. We've got 90 appraisers in the Houston market on our panel. They're all about the same. And it's also property specific. So Jen, you did mention, I know they've got to stay competitive and they still want those 30-day contracts, but you guys get those contracts when they're executed to Jen immediately so her team can order the appraisal. Jen, I'm going to tie you in here in a second, but I had a great question in another similar class, and they asked me, do you think we're in a bubble? And this is a good question that maybe you and I can discuss because you and I lived the financial crisis of 2008. And I think what's different in this market is not only are the buyers way more qualified and the lenders are more stringent, um, there's just more activity going on. So two factors that I'm seeing, because we do appraisals in 32 states and not every state is as busy as Texas. I think that there is a boom of people moving to Texas. I'm very bullish on what's happening here, Austin, San Antonio, Dallas. When there's that much demand, it is real demand. It's real people moving in here. It's people also because of COVID changing the way they want to live. People are not afraid to move out to the suburbs. So now their townhome that they lived in the Heights for 10 years isn't enough space for their growing family. And now's the time to move. They want space. They want a pool. They want space for work with the new way people are working. So there's a shift right now. And we're getting the brunt of it in Texas. Texas is a great state for business. It's a great state for, there's no state tax. And I can't tell you how many calls I get a week about people that need an appraisal because they're moving in from California paying cash for properties to Houston. In Austin, it's like 10 times that. So I don't think we're in the bubble that we were in 2008. And Jen, I'll let you answer that. And then I also want to ask you, where are rates today and what are you guys seeing coming up? So we can kind of gauge what.
Rates have been down the last few days. As more people are vaccinated, people feel better about the economy. They're opening slowly back up, different states faster than others. So there's that positive sentiment. And then, people are going back to work or earning more, and all those things are improving. So the economy is improving. It is a week by week thing. We saw in the last month and a half, there was definitely a sharp increase in rates, about 0.5% to 5/8, and it's calmed down a little bit. It's gone a little bit backwards. So net in the last 45 days, we're probably up 1/4, up 0.25. So things are getting a little better. We have seen the big change in investment in second home properties. Those are priced higher now because it's a whole different topic, but Fannie Mae reduced their exposure on those kinds of properties. So
high risk. They're
higher risk.
Yeah.
And so your investors and second homers, vacation homers, will pay a higher interest rate than they normally would in the past because of that change. But for the most part, rates, trending upward, but they're okay. They've come down a little bit from the hoopla of a few weeks ago. Forecast, whichever person I believe, or, everyone has their own. I think they could trend to the high 3s by the end of the year. As the economy trends to get better. I have heard, and I have another on my YouTube channel, Alone with Jen, I did a podcast with an investor, a real estate investor, and he does a ton of research. And he believes that we're going to have tight inventory for 7-8 years till 2028.
Wow.
It's not the time to get in is now and start your appreciation now, because rates are still relatively low and values are just going to continue to go up. He doesn't think that this inventory situation is going to solve anytime soon.
Yeah, so reports that I've been reading, there's a shortage of about 4 million homes across the US, and they think it would take builders 4 to 5 years to fulfill that demand. Obviously, that can change with rates, but that's a great perspective. And yeah, there's a true shortage. And again, I think we're going to feel it more in Texas because of so many people moving here.
I do believe that. He also said that our shortage in new construction in Houston is what's kept our market from being a California, from those high, because new construction has always pretty much leveled things out because it's keeping the prices in check, right? But really since 08 and 09, when builders couldn't get as much land development loans, he said this shortage has been brewing for a long time. Builders don't really have, in the past, if you think of the last 10 years, they don't have a ton of inventory. They do and they don't, not really, not like they used to a long time ago. And I was like, you know what, I guess that makes sense. And so now they really don't have, I mean, I heard one community, people were like sleeping, camping out at night when
Yes.
Saturday a lot was opening and there were like people literally camping out. I can't remember what neighborhood it was. It was in Cyprus, but so that between that and then the people moving here to Texas, we're seeing a lot of clients. We have a lot of reload clients coming here for different reasons.
Yeah.
We're getting a lot of people from Seattle and a lot of people from California is what we're seeing, the two main states, if I had to pinpoint it. For sure.
That makes sense. I love looking at the economic factors. For a long time after Harvey, I was really pessimistic on Houston's future, and then the oil crisis. Oil's not doing that great, but I've got a different perspective now after talking to people with so many companies moving to Texas. Guess where the number one closest port is if they need to export stuff? It's Houston, Galveston. Yeah.
And Austin's just getting too high priced. I mean, the stuff we hear from our Austin office is crazy. Like
crazy. We've got staff appraisers there. Every appraisal comes in low. And it doesn't matter.
People don't care. They're paying. There's people that are paying.
They're paying. Some builders there. I'll give you an idea of what's happening there. So a home that similar neighborhood to Katy, nice production homes that would sell for $850 here that were selling for probably $900 there a year and a half ago are now selling for $1.8 to $2 million. It is absolutely insane. And what builders are starting to do, they're not building homes anymore for people. Like you can't go in and say, these are the options that I want to pick. No, they're building them spec and then they're going to auction and they're selling for probably 20-30% more than they typically would if they were built to spec by a buyer. So it is absolutely insane. I think I'm much more optimistic on Houston now. I think everything that's happening in Texas is going to flow down to us. I think we can still attract a lot of people, especially with commercial real estate, especially on the office side being so inexpensive still in Houston. I think that'll draw a lot of people to Houston.
Yeah, I hope so.
Yeah.
I hope so, but it's the constant worry, and we're going to wrap this up here. And I really appreciate you coming on just to talk about what's going on. And I hope that people that watched got a lot of nuggets and talking points for their sphere. I'm super worried about the affordability index and clients that so deserve a home that are FHA and VA, and they might have down payment assistance. I mean, they need a helping hand. My single mamas and my vets, and they're not getting these offers in these 300 below price ranges or even above, but mostly those, because it's just so competitive. I'm hustling like all weekend. Every weekend I make 7 to 8 calls to listing agents talking about, how great my buyer is. Like, it's exhausting, but I do it. But I've got to hustle. Like, we have to do something to stand out, and sometimes it works and sometimes it doesn't, but just to let them know that we're communicative and we're a local lender and we have a local appraisal list. And I mean, all those things as they're spreading 90 offers out on their, I don't know. And we can debate this later, but I just think it's irresponsible to accept 90 offers on a property. I'm sorry. I'm going to debate that till the cows come home. Like, just put a limit on it.
Yeah.
And just, leaving it open a week and knowing you're going to get 100 offers or 90 or 80 or 60. I don't even know. It's just nuts.
Yeah.
It's super nuts.
It's a very, very difficult job for you buyer agents right now. I feel your pain, and I know that you're, probably making offers on multiple homes and not getting them, and that's why you're making offers much higher than list price on some just to finally get someone to accept an offer. We're just sorry as appraisers that we can't use these other multiple offers as part of proving the value. We know what's going on, but we're tied. I just pray that you guys get a lot of listings here in the near future. We need the inventory, and we need things to stabilize a little bit more. Although
Yeah.
let's take it. It is a busy market, and we do have to hustle, like you said, Jen. We're all working 7 days a week. I took a call last night at 8 p.m. when I was trying to put one of my boys down, and it was
You
a real
have to.
help. You
I
have
mean,
to.
we have to. Yeah. Hey, there is a question as we wrap up from Rebecca. What is an equity appraisal?
Um,
I don't
I
even
don't
know
know what an
that.
equity appraisal is. I've never heard of that before.
Maybe that's what we were talking about, property inspection waiver, and maybe it's just worded a different way. I don't know. I haven't heard that term, but maybe it's someone who's putting down a lot of money, and because of that equity, like I said, when it's run through the portal, maybe it's getting a waiver or something. I don't know.
If they email you that question, you said he mentioned
You
talking
can
about
research it. Okay.
Um,
Awesome. Someone said he mentioned it talking about Austin. Oh, maybe she said you mentioned it when you were talking about Austin.
no, I don't know. There's no such thing as an equity appraisal, so I'm sorry. I can't answer that. There's no such
Gotcha.
thing as an equity appraisal. Yeah. Sorry
Gotcha.
about that, Rebecca.
Well, listen, everybody, thanks for popping on. Those that did come, we've got a notice of who's on. Michelle, you've written it all down, right, of everybody that's been on, and we'll be sure and send y'all the video, and then we're going to post it on the YouTube channel as well, so you can watch it for years to come. But thanks for, or at least months to come. Thanks for popping on. Thanks for all the great questions. Y'all have a great day, and we're all in this together. So this is where a team is more important than ever. So loan with Jen. We're hustling. We're hustling.
All. Good luck out there.
Yeah, you too. And thanks, Alex, for spending an hour with us today. I super appreciate it.
My pleasure. Thank you, guys. Bye.
Thank you.
Thanks,
Bye,
Alex.
everybody.
Bye.
you.
Talk to you soon.
Bye.
Bye.
Legacy Mutual Mortgage is an equal housing opportunity lender. The opinions expressed here do not reflect those of Legacy Mutual Mortgage.